As of the close of trading on Friday, January 23, 2026, SMX Security Matters PLC is priced at $18.01 per share. This represents a significant intraday decline of 10.04% from its previous close of $20.02. Over the last 5 trading sessions leading into this weekend, the stock has faced intense volatility, swinging between a high of $20.66 and a low of $18. While a double-digit drop in a single day might look like a red flag to the average observer, the reality under the surface is far more complex than a simple sell-off. What most investors are missing is that this price movement is happening against a backdrop of a massive balance sheet restructuring. Just weeks ago, the company announced the full conversion of over $20 million in debt into equity. In the world of micro-cap stocks, this often creates a temporary supply overhang as note holders receive their shares, but it simultaneously wipes out a massive liability that was threatening the company's future. If you've been looking for investment help on various investing sites, you've likely seen the common narrative: SMX is a high-risk penny stock struggle, but the reality is starting to diverge from that expectation. While the price is down today, the company recently opened a corporate account with the Kraken exchange. This isn't about speculative trading, it's a structural move to support their plastic cycle token. They are building a digital settlement layer for physical materials. Most people think of supply chain tracking as just barcodes and spreadsheets, but SMX is trying to do something fundamentally different by embedding molecular markers directly into the raw materials themselves. The market expects a company like this to burn through cash until it disappears, which is why the recent debt-to-equity conversion is such a curveball. By eliminating those convertible notes, they've cleared a major hurdle that often leads to death spiral financing. When you look at the activity on a trading platform or your individual brokerage account, you might see the high volatility and think it's just another speculative play. However, the institutional activity tells a different story. We've seen roughly $3.25 billion in institutional inflows over the last year, even as the retail sentiment on apps like the Robinhood app or through Robinhood Investments has been mixed. This gap between retail fear and institutional positioning is where the most interesting opportunities usually hide. For those using a self-investing approach or managed services like Schwab Intelligent Portfolios, the volatility here is a masterclass in risk management. SMX isn't just a software company, they are an infrastructure play. Their tech is being used to track precious metals in Dubai and rubber in Singapore. They recently expanded their rubber traceability platform to include latex and rubber gloves, a move that targets a massive industrial market. The expectation is that these pilots stay as small tests, but the reality is that regulators are beginning to demand the exact type of physical proof that SMX provides. Whether it's through Fidelity Wealth Management or a simple Robinhood stock trading account, the question for investors is whether the company can scale these industrial partnerships fast enough to offset their operating losses. Let's talk about the actual trading environment. If you're looking at the SMX stock chart on your Fidelity Brokerage or Interactive Brokers platform, you'll notice that the volume has been concentrated around these major news breaks. On days when they announce a new integration, like the recent one with RFID and NFC chips, the volume spikes, but the price often settles back down as the market digests the dilution from previous funding rounds. This is the tension I mentioned earlier. Investors want to see the 4,200% gains they saw in late 2025 repeat, but the market is currently in a show-me phase. They want to see if the plastic cycle token actually gains traction as a legitimate credit mechanism for recycled plastic. Comment below how many shares of SMX you currently hold, or if you are waiting for a lower entry point before you invest online. When you compare SMX to its peers on sites like Interactive Brokers or through various Fidelity ETFs, it's clear they don't have a direct competitor that does exactly what they do. Companies in the packaged software space like Okta or CyberArk deal with digital identity, but SMX is dealing with physical identity. This makes them an outlier in almost every intelligent portfolio. Their business model involves marking materials, plastics, metals, textiles, with a chemical signature that can be read at any point in the supply chain. It creates a digital passport for the material. It's a solution for the circular economy that doesn't rely on people's honesty or paperwork. It relies on the chemistry of the product itself. The recent financial reports for the period ending June 2025 showed an operating loss of about $23.7 million, which was a jump from the previous year. This is the reality that keeps the stock price suppressed. They are spending heavily on research and development to make sure their markers can survive the recycling process. For someone doing online investing through a SoFi trading platform or checking their SoFi stocks, these losses are the primary risk factor. However, the company has been aggressive in seeking alternative financing, including a $1.4 million loan from Abri Advisors and the aforementioned debt conversion. They're effectively trying to keep the lights on long enough for their technology to become a global standard. Looking at the broader sector momentum, the push for ESG and supply chain transparency is a massive tailwind. If the government passes more stringent recycling mandates, companies will be forced to use systems like SMX to prove their recycled content claims. This is where the expectation of a penny stock could be shattered by the reality of a utility stock. If you are using Interactive Brokers Trading or the Robinhood app to find the next big move, you have to look at the catalysts. The next major catalyst for SMX is likely to be an update on the plastic cycle token's adoption. If a major global brand signs on to use that token for their sustainability reporting, the current $18 price point might look very different in hindsight. The risks are also very real. They've received delinquency notices from Nasdaq regarding their listing requirements. This is a common hurdle for companies that have gone through reverse stock splits, such as the 1-for-8 split they executed in late 2025. Investors using Fidelity IRAs or other long-term accounts need to be aware that the threat of delisting or further dilution is the reality that counters the expectation of a technological breakthrough. It's a high-stakes game where the company is racing against its own burn rate. This is why you see such wild swings on your Interactive Brokers account. It's a battle between the believers in the technology and the skeptics of the balance sheet. In terms of the future outlook, we have to look at how they're positioning themselves as more than just a tracking company. By opening a Kraken account and developing the PCT, they are moving into the fintech and infrastructure space. They want to be the settlement layer for the circular economy. This is a bold strategy that bridges the gap between physical manufacturing and digital finance. If you're checking your investment via the Fidelity mobile app or looking for investment help on other platforms, you'll see that most analysts don't even cover SMX yet. This lack of coverage is typical for companies in this stage of development, but it also means the market might be slow to react when the physical truth of their technology finally meets a large-scale commercial contract. To wrap this up, the situation with SMX is a classic example of a company whose technological potential is currently being weighed down by its financial history. The expectation from many retail traders is that this is just another volatile ticker to flip on the Robinhood trading platform. But the reality is a company that has managed to wipe $20 million of debt off its books, partner with major regional hubs like Dubai and Singapore, and develop a molecular-level tracking system that is nearly impossible to forge. The market is pricing in the risk of failure, but it may not be fully pricing in the consequence of success. We've covered the live price action, the institutional inflows that dwarf retail participation, and the shift from a debt-heavy balance sheet to a more streamlined equity structure. We've also looked at the expansion into the rubber and plastic markets and how their treasury strategy with Kraken is a foundational move for the plastic cycle token. The contrast between the stock's volatile daily movement and its ambitious long-term infrastructure goals is the central tension here. Whether you use Fidelity, Robinhood, SoFi, or Interactive Brokers, SMX is a name that demands you look past the ticker and into the chemistry of the business itself. The future of global trade is moving toward mandatory accountability. Documentation is no longer enough. Proof must be physical. As SMX continues to embed its identity into the world's raw materials, the divide between what the market expects and what the company delivers will be the ultimate decider of its value. Keep a close eye on their next quarterly filing to see if the operating losses begin to narrow as these industrial partnerships move from pilot programs to full-scale commercial use. That will be the moment when the reality of their business finally catches up to the expectation of their technology. Would you like me to analyze the recent